you can't be an accountant, buy a boat, and say, well, I needed it because it was good PR. Ordinary necessary business expenses, cost of goods sold, capital expenses. These are probably all terms and phrases you've heard that are likely confusing because you run a business, you're not an accountant. So we're gonna kind of break that down for you here. Basic overview, ordinary and necessary are the things that you need to run your business, but they don't actually go into making whatever you're selling or the service you're providing. And then your capital expenses are gonna be, I bought a building, I bought a vehicle, I bought something that holds value for longer than a year as a general rule of thumb, so that it's something you're going to use long term. Isn't actually an investment, would be your capital expenses. We'll start with ordinary and necessary. To be an expense for your business, it has to be ordinary and necessary, and that term "and" is a really important part because it can't be ordinary or necessary. It has to be both. They go hand in hand, so it can't be necessary. They have to go together. Ordinary expenses are usually those things that are industry standard expenses. So you look at something along your business and most people need it or they use it, would be your ordinary expense. Necessary are things that are helpful to run your business but aren't necessarily indispensable. You can still operate without it, but they do help in your business. So those are your two, ordinary and necessary. But just to look at it along the lines, you can't be an accountant, buy a boat, and say, well, I needed it because it was good PR. It's not industry standards. Just to help determine whether it's ordinary and necessary, there's a couple questions you can ask yourself. Does this pertain to my business? So you sit there and think about it. Do I need this? Well, no. Does it really pertain to it, like the boat? You said there's an accountant. Do I need a boat? Well, I want a boat. I can take clients out on the boat, but do I need the boat? No. So not an ordinary expense. Also, like those other two expense types, can it be a cost of goods sold? Can it be a capital expense? Then it's not ordinary necessary. Doesn't mean you can't buy it or don't need it, but it's just not an ordinary and necessary business expense. They go elsewhere into your thought processes and your financials and things along those lines. There's also another method that is pretty popular. It's called the laugh test. And so back to the example of the boat and the accountant, this is actually a court case that was out there. Mr. Henry was an accountant, bought a yacht, had a little 1040 pendant flag on it, and said that it was a business expense, an ordinary and necessary business expense, because, well, it brought PR to his firm and brought attention to him because it said the letter numbers 1040 on it. Went to court. And so they said, no, not ordinary, not necessary. You don't need this boat. So it's called the laugh test, because if you can't write it down on your tax return without laughing, it's like, oh man, I'm getting something by the tax auditor, the tax collector, then it doesn't fly. So if you laugh and say, you know what, I pulled one over them, I've pulled a fast one, then it doesn't fly. That is not actually an ordinary and necessary expense. The IRS really isn't looking to like catch you on this one or second guess what you actually need, but it's just a good idea of how you follow what you're looking for on your business expenses. And it's also like, yeah, you want to buy stuff you need and stuff, but you also don't want to waste money. So it also helps into your cash flow when you start putting these thoughts to your expenses, because you don't want to waste money just thinking you're getting a tax deduction when it really isn't a tax deduction. So you need to look at those things, and it helps you not just feel like, oh man, I can't write this down. It helps you kind of know, what can I buy? What do I need to buy? How do I spend my cash the wisest? A few examples of what these expenses would kind of be like like across the board for businesses would be like your wages and your salaries, any taxes paid that pertain to your business. So you own a building, you pay real estate taxes, things like that, payroll taxes. Those are things that pertain to your business. So those are good, those are expenses. Anything like retirement plans, if you have employee sponsored retirement plans and you contribute money for them, matches, that stuff goes on there. Rentals, so say you don't own a building, but you rent your building, that would be a common ordinary necessary expense. Insurance, interest on if you own a building or any other assets, you have interest on it, things like that, or you're pretty across the board. Now you get into industry specifics, then there's a whole list of things that could be. So for more, like you're gonna look at your business, look at your industry to know what specifically is gonna be considered ordinary, necessary, but these are just like a few basics that are kind of across the board. I mentioned earlier cost of goods sold. These are the things that go into making whatever you make or you sell or your service. So if you make widgets and you need metal and rubber and plastic, so you have to buy those things to make said widget to sell, then those are your cost of goods sold, because that's the cost of making whatever you sell. Without these things, you don't have a business, you don't have a product. So ordinary, necessary are those things that make it really nice to operate your business, but cost of goods sold are the things that you have to run your business. So there's a lot of things that go into your cost of goods sold. It can be the actual material, but also the labor specifically used to make said widget, or the cost of the container. So you make earrings and you have a container that you put the earring in to sell. That is also part of the cost of goods sold. Things like that. Like, so cost of goods sold is not just the materials, but it's the things that kind of encompass and make the material. The freight to ship the material to the client, the freight to ship it to you to make the widget. All of those things also can go into cost of goods sold. You can look at your specific situation, but there are more than just the metal, the rubber, the plastics. There's other things inside of that as well. And then your capital expenses would be your third kind of thing you're looking at. And those are gonna be, I bought a building, I bought a car, I bought whatever that has a long-term value for your business. So you sold, these are the things that you sell with the business that actually still retain value and that have more value outside of just making your item. So these are those things, they're investments. That's a good way to think about your capital expenses. These are your investments, but not like a retirement plan investment, but like an actual, like a building, something that has tangible value outside of operating your business. Like if you're an accountant again and you've bought an office building, well, if you close the accounting firm, that building still has value. And so that's how you know that it's a capital expense and not one of these other cost of goods sold or ordinary necessary expenses, because if you're not in there, it still has value. It's still an investment for your company. It increases the value of your company also. And so these are how you look at those things. So that's a brief overview of cost of goods sold, capital expenses, and ordinary necessary expenses. If you want to look at these things again, watch more specific detail, there's timestamps below. And if you want more information, just like, follow, subscribe to our channel, and we'll be here to help. Thank you.